thank the chairman for yielding, and it's been a good, productive afternoon. And first, we've heard broad agreement throughout today that taxpayers deserve clarity. The question is not whether we modernize the tax code. The question is whether modernization is grounded in parity, fairness, and economic reality. We should fix genuine compliance challenges. We should also support innovation. And I believe that we can do both of those things while not creating a tax advantage that is unavailable to certain taxpayers, other investments, or other forms of income. Congress should reward innovation, not tax arbitrage. For the past year, Representative Miller and myself, as well as our dedicated staff, have been publicly working on digital asset taxation legislation. There are three principles that grounded our work and will be my focus of my questions today. First is on digital assets. They should have parity with existing financial instruments. Where there is uncertainty, we need to address that. Second, we need to solve for the problem, or excuse me, solving that problem should not create another problem. We cannot create special tax loopholes. And third, we must ensure that any benefits reflect economic reality. For this package to stand the test of time, it must be fair, administrable, and resistant to abuse. I want to thank Chairman Smith for adding my amendment that includes those changes that I've been advocating for. And let me be clear, the changes that I'm asking for have been publicly vetted and socialized with stakeholders. These are the minimum to get my support for this package. But there are still more changes that must be done to get this policy right, and several of you have identified some today. As the chairman has said, we are on the 1 yard line, and if we want to meaningfully do this together, we have to work together to accomplish that. But let me start with validation rewards. Under current law, when someone receives a validation reward and can use it, sell it, or control it, they generally owe tax on it at that point. Is that correct? Yes or no? All the panelists. Very quickly.
Yes.
I would disagree that the law as applied is correct right now.
Okay.
I think it's unclear, and therefore I think your attempt to try and achieve balance with that by having an election is a sensible one.
I agree with Mr. Zlotkin's explanation.
Thank you. For the past year, I've heard concerns about people owing tax before they have practical access to cash from those rewards to pay the tax. Some have referred to this as a phantom tax. I think that is a fair concern. The question is how Congress addresses that concern without creating a new loophole. Yes or no, is phantom income and liquidity concern a major issue that Congress needs to address when it comes to validation rewards?
Congressman, I agree with that. I think it is an issue. I think liquidity is an issue and a major reason why I endorse some of the proposals that you've come up with. Thank you.
And Congressman, I believe that there are issues in determining when there is appropriate dominion control, and it presents challenges about when this should be taken into income, and it does present issues of liquidity and being able to meet one's tax burden.
Mr. Karcher, can Congress address the liquidity concern without creating a system where someone can delay paying taxes indefinitely?
Yes, I think that sort of short time limited deferral can address liquidity without permanent or indefinite deferral. That's certainly the case. That would still be a little bit different than the normal current treatment, but if your focus was liquidity, that would be your tool.
And if Congress created that kind of unlimited deferral rule here, would that be more favorable tax treatment than what most workers receive on wages or what ordinary investors receive in a 401k, for example?
It would be definitely more favorable than wages, which are taxed immediately. It would be more favorable than any stock held in a brokerage account, and it would probably be more favorable in many cases than even stocks held in a retirement account, because you wouldn't have the required minimum distribution rules apply.
Very quickly, with the indulgence of the chair, I just want to ask about charitable deductions. I'm not here to oppose charitable giving. I want to make sure that the deduction reflects the real economic value the charity can actually receive. Mr. Karsher, at the end of the day, isn't it the clearest measure of value what a charity is actually able to receive when it sells an asset?
Yes, using the third-party market transaction is the best price discovery we have.
Congress has dealt with valuation disputes for years involving hard-to-value assets, and that's why we need to get that portion right. I'll just close by saying, if Congress does nothing, regulators, courts, and offshore markets will define the rules instead. Inaction is not neutrality. It means uncertainty. It means taxing the system, gaming it, fragmented enforcement, and exploitation by wealthy and sophisticated actors at the expense of everyday consumers. That's what we are working to achieve in the PARITY Act, and I hope with the majority's indulgence, we'll be able to get to those larger policy goals so that we get this right. We don't just get it done. Thank you, Mr. Chairman, and I yield back.